Hey there, traders, and welcome back for episode number 122 from the StockBandit.tv. It's a place you can always find trading videos to make you better. And on Sundays, we take a look at the major averages and we get kind of prepared for the week ahead of us, expecting some key levels to take a look at and kind of keep a watch on in the days ahead, because we know that many individual stocks are going to take their cues from how the indices are behaving. So let's take a look here at the big indices, and we're actually going to start off taking a look at the spiders. This is SPY, and this is the tracking ETF for the S&P 500 index. Now, if you were maybe on spring break last week, might be about the only reason you wouldn't know this, but we had a run here that went into last week. It concluded on Wednesday of 14 consecutive positive closes for this ETF. Now, the S&P itself was actually not up 14 in a row. It had a couple of fractional down days during that period, but this ETF was actually positive for 14 sessions in a row, and it really kind of epitomizes the nonstop move that we've seen lately, not only in just the last few weeks, but all the way back to the February low, which happened early in February. So, this has been a relentless run on the way up. We've seen very little selling pressure. What little selling we have seen has been kind of one or maybe 2 days at a time, if you really technically take a look at Thursday and Friday last week, although Thursday was just a fractional down day for the spiders. But really, this really is just an indication here that this market has been moving one direction nonstop. And so if you're a trader and you like to see some back and forth price action, you like to see some consolidation take place and be able to play some reversal type plays, you've seen none of that lately. So, if you were on vacation last week, that was a great time to miss. And, you're coming into the market this week with some pretty interesting things taking place. So let's flip on over and start looking at the indices here. The NASDAQ, for example, did put up a couple of interesting things on Friday. It did mark a new 52-week high last week on Wednesday. Very narrow range day on Thursday, and then Friday we took out Thursday's high and then we closed below Thursday's low. So with a narrow range day like Thursday, not surprising to see a engulfing bar one way or the other. In this case, it was bearish, so we engulfed Thursday's range and we closed beneath it on a very heavy volume. Now that was option related. It was a option expiration day, and so it's very common to see, especially when you get the quarterly options expiring, to see very big spikes in volume. So, from a purely technical standpoint, yes, we saw a day of distribution with stocks down on very heavy volume, but at this point, it doesn't mean that this has to be the end of the run. At this point, we're still a considerable distance off of the lows set in February. This one bar itself and the fact that this market is very stretched to the upside does not in itself mean that this run is over. It doesn't mean that we just, all of a sudden head straight back down. I do not expect that to take place here right off the bat, at least anyway. What's taking place is, a rest at this point after this kind of a move would really surprise nobody. And so, to see this market either pull back a little, maybe to kind of test this uptrend line that started in early February, that would come as no big surprise. That would really coincide with this former resistance level that was the January highs at 23.26. So if we do see some follow through to the downside, I will watch for a test of this 23.26 level to occur in the days ahead. But again, we're gonna have to see some follow through to Friday's selling in order for that to occur. Now on the upside, we have resistance in the very short term right here at 2400. I'm watching those levels as well. But really, this market lately and the indices have really, in my opinion, been driven by short covering. And that's not to say that this isn't bullish. Anytime you're hitting new 52-week highs, like we're doing in each of the indices, NASDAQ included, you're in a bullish environment. However, I think this is largely driven by short covering. And let me make a couple of cases for that. Number one, we've seen hardly a down day, and we've seen no real profit taking. In a bull-driven market, you see stocks continue to advance, and then you see some profit taking kick in. The bulls want to go ahead and ring the register, and we're not seeing that take place because every minor little dip that we've seen lately, the bears have to use that weakness to buy into and cover their shorts, and so they're really wanting to alleviate their pain much more than the bulls are looking to ring the register and cash out because they've had to take very little action lately. I think kind of the limited volume on many of these days that we've seen dating back to early February. And take a look at this initial move off the lows. Very light volume. That's a lot of short covering in my opinion. The other thing that I feel like is based on short covering is the fact that we're not seeing the big, upside spikes on a day-to-day basis. Typically in a bull run, you're going to see some pretty good sizable advances from day to day, and the single day advances largely during this run have been pretty minor. This has kind of been a death by 1,000 paper cuts to the bears because it's just kind of a bunch of 0.5% gains on a day-to-day basis that just keeps on trucking, stacking on top of each other one after another. So when you look at the daily chart, that adds up to a lot, but on any given day we've not seen very many sizable up days. Where are the 200-point Dow days on the upside? That we've not seen those. So those are pretty non-existent lately. So at this point, we do have new 52-week highs, and that really brings a new element into the picture. That means that the bulls now, their attention is on this market, and they know they've got the bears on the ropes. So I would not be surprised to see the bulls start stepping in and defending the dips as well. So that could not necessarily, spur this market much higher, but it could keep us somewhat bound here for a little while. Maybe we pull back and challenge the January high. I mean, this is just a possibility. It's not a prediction. And maybe we kind of sit beneath the high set last week and we kind of churn and move sideways and sort of rest a little bit. That would be very healthy to see, and certainly is one scenario to definitely keep in mind. So we could be shaping up for a really good battle here in the days and weeks ahead. Take no bias with you as you head into a brand new week and as you head into the next few weeks for that matter, because really this is the stock market and anything is possible at any time. So moving on to the S&P 500, we do have the prior high set in January at 1150. We actually flirted with that level just recently, so we could easily come back and kind of test that from the upside. We topped out just last week shy of 1170, so could be in this short-term range here as well. And for the Dow, this index actually on Friday pulled back and is really testing currently this breakout area from the January high. That's about the 10,729 level. So we finished just slightly above that, dozen points or so. But this uptrend line is really the one to be watching. It's kind of been marking the pace of this advance, and so look for maybe a pullback to 10.6 to that trend line there. And if not, then this prior key level right here at 10.5 is the next one to be watching. So very interesting things shaping up out there for the market. It really should be adding a little bit more back and forth and some basing action maybe. If we can get even some pullback or rest action in the days ahead, it would be very healthy for us as traders, and I do expect that to arrive pretty soon if it doesn't happen in the next couple of days. So thank you again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.